Welcome to the Hog Market Talk podcast, your weekly deep dive into hog market fundamentals, breaking news, and industry insights. Trading commodity futures and options involves substantial risk of loss and is not suitable for all investors.
Alrighty. Well, we've got Jeff here with us today. How's it going, Jeff?
It's going pretty good, Mike. We finally got a little bit of green on the screen in the hogs. Can't say that too many days in the past 2 months or so.
That we can't. Let's talk a little bit about what we got going on here. I'll add June lean hog futures to the mix here.
Perfect.
It looks like got close to that old low before we found some support the last couple of days. But man, it's been a heck of a sell-off. If you look at these front months, June in particular, we going all the way back. We had about a high on February 4th at 112 on June. And here just a few days ago, Jeff, after a rough couple days right in a row, darkest before the dawn there, 94.77.5 was our low on June. That's been a rough one, hasn't it? It's gone down pretty hard, pretty fast here, just continually, and not quite to those old lows. But yeah, what's your take just on the sell-off so far here? And just remind our listeners a few of the reasons why we've experienced this hard of a sell-off here over the past month or so.
Well, I think part of it is it does you some good to look and stare at some charts for a while. Because I do think they're been pretty impactful, especially the tail end of last week. There's a lot of technical traders, almost any indicator that you used looked pretty bearish for quite some time, right? But more importantly, here in the last Thursday, the tail end of last week, you were able to, we had some different people drawing some trend lines. You can. This is a classic downtrend, right, Mike? You can draw some lines across the top of those highs. You can draw some lines underneath those lows. And what happened there when we put in that low is we did bust through the trend line to the bottom side, right? And we picked up some momentum, and that eventually put the low in the next couple trading sessions there. But so I think that's just an example of the activity that we've had in that marketplace. We have a technical sellers, been really easy money for them to get on the short side of these hogs. Momentum traders have done quite well, right? Just figure out which way the momentum's turning, get short here for a few days, let the thing float back towards the top end of the range and do it again. So you've had a lot of money back and forth, I think, in the marketplace doing that. And then I know we've talked about it, and we'll hit on it again. As you switch the chart to the one that you have the index with the futures against up there, Michael. Yeah, that one. Blue line here is the CME index, and this is over a pretty long period of time. The candlestick red and green is the June lean hogs, of course, but we had this ongoing issue of we had all this optimism in the marketplace, most represented by the June contract. And then the blue line, CME index, never moved, right? It didn't go up. More weeks passed. No good news on cutout, no good news on cash. And the June futures continued to get closer to where the index is at.
Seems like you can really tell right around that hump at middle of March or so in the CME index. It was basically when that gave us a head fake and that was heading higher. When that turned lower and has gone sideways, that is just not what the market was really hoping for here. I mean, for a little bit it was fine, but just pretty much since the end of March, beginning of April, they started to lose a little hope day by day. Sell this thing off, and they said we'll make the market prove us wrong in the long term. It seemed like here, Jeff. So
absolutely.
How long? What, $4 or $5 is normal this time of the year? Like when?
Yep.
So I mean, you're still sitting at a premium to that CME index today. Actually,
you are, but a chunk of that got put in there today with June being almost $1.50 higher. So when you put that low in. I think you had to look at that and say, okay, we're within $5 of where the index is for sure, maybe 4.5. And that was become I want to say pessimistic, but clearly that's maybe the wrong word because there's still a little bit of optimism built in it. But if you think about, from middle of May to the middle of June, there's still a big jump in fundamentals there. So to say that you won't get $4 or $5 of increase in the CME index over the next even 3 weeks, I just don't think you can say that with a lot of confidence, right? So that is the reason why I believe you put the low in, is because you did get as close as what you were to the index here. And, now as, June puts another $2 of premium in, 2.5 from those lows, you do start to question it a little bit just because you're going to run out of time. But as far as, do you have to be $97, $98 on June if the index is going to hang out under 91? We'll find out. I think it's going to get a little tougher in the coming days unless we get some really good news as far as product is concerned.
Speaking of good news here, so I want to talk about numbers first. Let's talk about our harvest graph here a little bit, just numbers, and then we can work that into what we've been seeing on cutout and what some of those implications could mean. So can you walk me through some of the things that we've been experiencing on numbers here as of late, probably last week? This week you had the holiday, so no kill on Monday, basically. What can you break down for me here from the transition from last week into this week, and then kind of going forward on how things are set up, Jeff?
Yeah. So, one of the things I was getting at as far as, why do you need to expect some appreciation in CME index values, between May and to the middle of June is the number side of it. So we gotta get into some smaller numbers here. We weren't getting the demand boost that we would like to see during the month of May. We weren't getting product to move higher just because of the weather and the seasonality of that piece of it. So that is disappointing. We're also not seeing it on the beef side, right? So that's a little concerning, no doubt about it. But numbers will get consistently lower here, and we've seen that in the past 2 weeks, although maybe somewhat accidentally. What I mean by that, is we had some challenges as far as kills 2 weeks ago. We just had a lot of breakdowns in general in the past 2 weeks from quite a few different packers. So the 2 weeks ago, I think we lost over 30,000 because of breakdowns. The good news, if you will, is they weren't worried about making that up short term, so they're going to make some of that up here in June, which to me says there's maybe just a few less numbers out there. And then last week, a little bit slower kill going right into the holiday here. And then, of course, you got this week of the holiday week. So there's going to be some less product coming out on the marketplace. Did see a decent jump in the USDA reports yesterday on Tuesday. As of this podcast, we haven't seen the prints for Wednesday yet. But, quite hopeful that the marketplace, as far as negotiated product values reported on that 602, are going to start to see some shortening of the supply and represented in some higher prices.
Seemed like this belly chart here, that's been one of the big problems. What can you tell me about why we're seeing bellies specifically struggle, which is normally something that doesn't, right? Especially this time of the year, we normally see it turn around. We're not necessarily worried about this, are we?
Right.
Or is there a changing dynamic in the marketplace on bellies? Like, for example, if I go to a restaurant, the steak's expensive. It's probably not likely that restaurant's going to try to wrap that steak with another meat, like
Right.
bacon, for example.
Expensive meat, yep.
Exactly. Are we seeing some of that, you think, on consumer side, or what do you think's going on with belly?
Yeah, we're not sure. That is a concerning part, Mike, as you look for maybe some chinks in the armor as far as, or fly in the ointment as far as, is there some consumer demand issues starting to show up? We're trying to keep a pretty sharp eye on that. And otherwise, I don't think we would be really too worried about this at all. And we're not super concerned. What we're hearing is maybe more from the quick service restaurant business, Mike. So you've got some of the beef trimmings aren't doing very well. You've got the belly market's not doing very well. And then that's the reason that we're hearing about it, is the quick service side of the restaurant business is struggling a bit. And so that's a little concerning, right? That could be the tip of the spear here if you want to talk about all the pressures that we've been visiting about on the consumer. But I would think there too, like the seasonality should take care of that. So even if we are seeing some bigger picture issues starting to creep in, something we need to be mindful of and continue to be watching for. But as we get into fewer hogs, as we continue to be very short beef, as you get into a season where the consumer usually is going to eat quite a bit more protein, I think you're going to gloss all that over, even if you do have some underlying issues there, right? So that's a lot of the season that we're coming into is a lot of the reason why we're not getting very worked up about it. And yeah, bellies, bellies are the kind of like the have and have nots of the market, right? Like if you've got an extra load of bellies, they get really cheap. If you're a load too short on bellies, they get expensive in a hurry. So I think that's what you'll see happen here as our production decreases. I think they'll take care of itself.
What else do you got for us on the market here before we kick it over to a few other outside things and what we got going on next week, Jeff?
Well, one of the things that we're talking about this week, and we haven't seen this for a while, but all of those months like October, the futures months of October, December, February, even April, they're all trading. They're all trading lower than where the CME index came in for those respective expirations, right, this past year. So this is something to note. I think it helps to take a couple steps back and a couple steps up once in a while, right? There's no longer a lot of optimism priced into these futures markets, and that's okay. Markets go up, markets go down, right? And if they stayed the same the whole time, nobody would have any opportunities. So I think it's one of those things you keep your head on straight and look for the opportunities when they present them and don't need to force it when they're not there.
All right. Well, next Wednesday, I'm going to be at the World Pork Expo with you. I believe that goes Tuesday through Thursday there, Jeff.
Excellent.
And we're going to have a party. It's going to be fantastic. Please stop on by our celebration down there. We'd love to run into you, all of you. And please introduce yourself. I'll be there. It'll be a fun time. So please check in with us at World Pork Expo next Wednesday at our get-together there. And a few other things worth mentioning here, Jeff, is just outside market-wise. We've had very clashing, very fluctuating, conflicting signals coming out of the U.S. and Iran situation when it comes to the news we've had in the last 24 hours or so. Crude oil is held down most of the day. That's very significant, I think. We're down about $4 in the front month. We're only $89 on July crude oil here. But the corn market specifically, we're down another 5 cents today. So July's at $4.52. Dees is at $4.77 at the close today. That support level was supposed to be around $4.80. That was kind of a key support, and we did close below that in a pretty significant way. So it'll be interesting to see how the markets react here. It's obviously a lot up in the air here. We've got the next 2 weeks are dry. If it's dry after that, the trade is likely to look at that pretty hard. And then also, obviously, crude oil is all over the place with that conflicting reports between Iran and the United States, with just Trump saying we've got control of it. Don't worry. We're just worried about this regime change. Iran saying, yeah, the strait's not open. We're not signing anything. So pretty conflicting reports from the two sides that don't seem to be getting anything resolved. And from the other perspective of just things influencing some of those outside markets and whatnot, China, after those trade negotiations, it's still up in the air a little bit. Like, are they going to come in and buy U.S. corn by the end of this year or not? In the corn market in particular, when I'm following that, I'm a big spread guy. So looking at December to July, that spread's been weakening. We closed over 26 cents of carry there. So the spreads aren't real concerned about, hey, the China's going to come in, buy a bunch of old crop corn today. Looks like we planted a lot of it. Until the market proves us wrong, we're probably going to build some carry, Jeff.
They're kind of acting like they're pricing in a big crop to some extent as you look at what the spreads are doing, and even obviously the charts themselves. Seems like it might be a tick early for that, but that's the way the market's got a feeling for, don't it?
Yeah, the Bulls are going to have to hang their hat on this one for a bit and just kind of wait around. The moment they get something bullish, I think they will latch onto it pretty quick. I
That's
don't think
fair.
it's going to take much. But in the meantime, you just drift a little lower here this time of the year without any bulls getting fed, I think, Jeff. So
That's the part that we missed on the hog part of the conversation too, was the weather side, Mike. We haven't put any heat on these pigs yet this year, and that's happening here and over the next couple of weeks, similar to the discussion on the corn as far as the forecast goes.
all right. Well, thank you for your time today, Jeff.
Thank you. Take care.